This stock is up over 300% this month. Reddit's ablaze. The memes are flying. But in the background, analysts are quietly whispering about an $82 price target. So what's the real story? Is Opendoor just meme fuel, or is it a multi-bagger in disguise? Let's find out. Opendoor wrapped up the week with another green session, closing Friday at $2.54, up more than 5% on the day. That followed a week of solid, if volatile, trading, highlighted by a push as high as $2.91 intraday on Thursday. The stock has built some consistent support in the $2.20 to $2.60 range and is showing resilience despite the uncertainty surrounding next Monday's reverse stock split vote. Even more encouraging, Thursday's aftermarket bounce. The stock added another 11 cents after the bell, which is often a sign of continued bullish sentiment among traders willing to hold overnight or anticipate momentum carrying through the next day. It's that kind of follow-through buying that reflects deeper conviction. Now let's address the meme elephant in the room. Opendoor has been one of the most talked about tickers this week on Reddit, StockTwits, Twitter, you name it. The buzz is real. But is this GameStop 2.0? AMC Redux? Or is something different happening here? Let's compare. GameStop and AMC were driven almost entirely by short interest and coordinated retail activity. But Opendoor isn't just a short squeeze candidate. It's a company with real revenue, real operations, and a massive total addressable market. That's not to say meme sentiment hasn't played a role, it has, but there's also substance here. Traders are sharing deep dives on the company's fundamentals. They're charting technical levels, calculating entry and exit points, and cross-referencing housing data with company metrics. This isn't just hype, it's conviction backed by a business model that some believe could revolutionize real estate. In fact, some online communities are beginning to frame Opendoor as a next-gen disruptor that's been misunderstood by the broader market. Let's talk about the fundamentals. Opendoor operates in one of the biggest industries in the world, residential real estate. The company's model relies on buying and selling homes efficiently at scale, using tech and data to optimize transactions. Over the past year, housing has been a difficult space. High mortgage rates, low inventory, and shaky consumer confidence put pressure on companies like Opendoor. But things are shifting. Mortgage rates are stabilizing, and there are credible forecasts that they may drop in late 2024 or into early 2025. That could reopen the housing market, creating more volume and momentum, perfect conditions for Opendoor's model. As buyers regain confidence and sellers return, Opendoor stands to benefit from increased turnover and pricing efficiency. The early signs of a thaw in the housing market are already being noted by analysts and industry watchers, and Opendoor's digital-first model may give it a competitive edge as traditional agents adapt to the new conditions. And here's the kicker, some early valuation models pegged Opendoor's long-term target at $82 per share. That might sound wild today, but it speaks to the size of the opportunity and how big believers see the company scaling over time. No one's suggesting this happens overnight. But as the market recovers, Opendoor is well positioned to ride that wave and potentially exceed expectations. If the housing market does indeed rebound, it could serve as a rising tide that lifts the most agile players, of which Opendoor is arguably one. So, what's next? The reverse stock split vote on Monday will grab headlines, but that's not the real catalyst. That honor goes to the company's upcoming earnings in August. If Opendoor can demonstrate narrowing losses, improving margins, or even just steady revenue growth, it could validate the recent rally and send the stock even higher. There's a growing belief among investors that this earnings season could be the inflection point. The buzz has been built on belief. Earnings will be the moment where faith meets fact. And if those numbers come in strong, watch out. So, is Opendoor just meme stock hype? No. The excitement may have started there, but what we're seeing now is deeper. We're watching a business regain momentum just as its market starts to thaw. This isn't just a meme play. It's a company on the edge of recovery, with retail energy, long-term upside, and a massive industry to disrupt. It might not happen overnight, but if the pieces fall into place, Opendoor could be a multi-bagger in disguise. Thanks for watching. Hit like if you're holding $open, and subscribe for more updates as we ride this wave together.